I thought the company did a really good job reframing the story away from auto and towards AI, which was something that I think all of us expected them to do. The confidence around FSD, easily the most confident the team has been around that software, I think, and its execution. Basically pleading people to go try FSD v12 on the existing vehicles. The commentary around leveraging the inference compute long term and sort of turning this thing into an AWS model, which Hans has been. I think Elon liked or shared one of Hans's tweets around this, and he didn't cite Hans, which was a terrible thing. Elon, how dare you stealing other people's ideas? My God, it's just such a trend, as everybody says. No, obviously I'm kidding. But that really paints the picture as like, hey, they're thinking about this, they're verbalizing this on earnings calls, but I think this is multiple years out. I think the commentary around Q2 being significantly better than Q1 will reassure some of the short-term folks, I think, that are worried about a macro, and the fact that that 2024 versus 2023 will be higher. I think that's going to put some of that at ease. And they weren't really they were trying to get away from the $25,000 or the cheaper vehicle, even though they called out the move to that line to leverage existing lines for the cheaper car. They clearly laid that out on the quarterly earnings call, but they were trying to avoid as much as possible around it. But correct me if I'm wrong, I think they did say that they'll be talking about it on 8/8. So it's not just a robotaxi or cybercab. That was another thing that we heard from them. Cybercab or robocab. I forget what they said. Cybercab.
Which is what is that? Based on Cybertruck, right? Which I've been saying for a long time.
Well, we don't know that yet. Let's not get ahead of ourselves here. We don't know that yet.
It's a good marketing gig. It's a good marketing deal.
Yeah. But that was really interesting. That we're going to get details on these cheaper cars potentially. And there was a little bit of like that Elon sort of optimism where he said maybe by the second half of 2024 we'll start production of these new cars. I highly doubt that would probably be H1 of next year, late H1. If probably like what was that, June? No, yeah, June. So that's kind of where I'm at. I got to go through my notes. I have a lot written down, but those were sort of the standouts. And I think Elon's focus. I think Elon seemed very focused. I think it verbalized the long term very well of what the company is going through. The stock performed. It went higher. It inched higher as the call went on, which is something that Emmet called out. So yeah, I think great call. Really good way to pivot away from the Q1 numbers, the actual numbers, and lay out a future of the company that's actually closer than initially people thought, to get people excited again about the story. So I thought they did a really good job.
One thing that you did not mention is a big one, is that, when asked about his concerns about Elon staying, he said Tesla's going to succeed regardless. But then he did say that, one way that it can happen is that if we can generate cash flow, we can buy back shares. That should just make everybody feel a little bit better, hopefully. Yeah, I don't know if did you mention this, that they're in conversation with one major automaker licensing FSD. That's a big one. And a good chance we're going to sign a deal this year, maybe more than one. So we had a few people here saying no way this year, and a few of us, when I asked that question earlier, said yes. FSD is including China. And then the other one he said was, we expect QT to be much better. So this should stop the bleeding.
Yeah, and just to highlight the point about, the buybacks, that was in the context of getting Elon to the 25% control mark. And so, even if they have to buy back a bunch of shares to help make that happen, that's on the table. And so it does, we're going to be making a lot of money. Like there's going to be a lot of money flowing through to the bottom line. They're going to be able to buy back a lot of shares. And that's exciting to know that regardless of what happens, I think, that's what saying without saying, regardless of what happens with the shareholder vote, gonna probably be able to make that happen.
So I would just say real quick, so we can just get it out of the way, Megapack, 24% margin. That's what we've been expecting. I think, Matt, you had some higher numbers than what we've seen in the past, and we're waiting to see this come up a little bit, and it has. And the ramp and deployments will be up 75% over the next year. It may not always show up evenly in the quarters because it's lumpy. It's a big product that ships out in big chunks. So there's a lot going on there. And the fact that we now have confirmation that your car, my car, anyone's car can indeed be a robotaxi on the network. That confirmation was something that people have been waiting to hear, because with the introduction of the robotaxi as a concept, there were questions. Would it only be a steering wheel-less vehicle, or could you put it out? And it was nice to hear the idea that you can have a friends and family circle who have exclusive access to it, or you can say only 5 stars are, or any other number of limitations, and take it back anytime. It doesn't matter. No penalties. I think that's reassuring for investors, and I think it's something they were waiting to hear.
Emmett, do you want to go next?
Yeah, I was thinking about the buyback comment. I mean, that's good, and I've always thought in theory that would be great and it could contribute, but by itself, it doesn't get Elon to the 25%. I think he's at what, 10, 12, or 13% right now still. So to get him to 25%, you'd have to buy back like half the shares. And, right now, 500 billion market cap, that's if the market cap was where it is now. But if the company's generating a ton of cash flows, that market cap's going to be, in the trillions, and then you got to buy back half of that. And then it becomes almost like infinitely impossible to buy back half the shares in this lifetime, in my opinion. So I think it can contribute, and you could maybe get them a few extra percent, slow single digits extra percent maybe, but there really needs to still be something else to get them to the 25, I think.
Yeah, I guess I should clarify with some form of compensation. Like even if we strike down the previous compensation between some future compensation or making up, like we have to do something to compensate him for the last one. So between whatever we end up getting past for compensation and some buybacks, I think we can get there.
It seems like the most realistic. If this doesn't get, if it gets held up in Delaware, it seems like the most likely might be just to get reincorporated in Texas, and then I think he can get issued some preferred shares or something like that for super share voting shares, and that would get him comfortable with 25% influence. I feel like that's the most likely path at this point, but we'll have to keep a close eye on the next few months.
I think that's a big part of the push for Texas reincorporation. Not like, I know there's all this other noise, but I think that's the real impetus behind it.
Yeah.
So I think in general, though, this call was so good in so many ways because it dealt with the near term, it dealt with the middle term, and it dealt with the far future. How many times did he keep repeating to Dojo as a service, right? This idea of the inference compute that's sitting in all of our cars. I think it's 3 times in 3 different parts. There's a reason why he's really focused on the inference compute that they're, go ahead. Yeah, Farzad.
There was one thing I wanted to mention. I think it's super important. Towards the end, the 480 question where Tesla kind of, in a way, said, well, 4680 was kind of a hedge. It was kind of a hedge to fight off the high cost of batteries that we were experiencing because of the immense move towards EVs from the competition, let's say. And now they're seeing the opposite. They're seeing a lot of companies are retreating. They're seeing a lot of companies moving away from it instead of investing into hybrids, which opens up a gigantic amount of production capacity with suppliers, right? And these suppliers now are able to sell to Tesla, where Tesla has the leverage, and they are in a winning position because they can dictate price much easier because these guys are desperate to sell batteries. So when you're thinking about that equation into an environment where they're going to start leveraging their existing lines to come out with an even cheaper car, and with FSD bolted on top of it, you're not just going to get the value prop from the FSD software. You also you have deflationary forces for EVs kicking in heavy because of the reluctancy of those EV OEMs or those OEMs to go into EVs. So I think that is a variable that was a huge one, a huge takeaway for me, because that reinforces that Tesla's ability to lower price and come out with cheaper models will still be paired with profitability, mainly because of that underpinning. Because they'll be able to get batteries at much cheaper than they have been before. They don't even need 4680. They're just going to buy it. So they outsource that essentially. They let everybody else figure it out. They're tripping over themselves to sell batteries to Tesla. Tesla wins. They're the only ones making EV at scale outside of China. Like, how is this not a better setup for Tesla long term? That was a huge takeaway for me too from this call that I forgot to mention.
Yeah, I noted that too. There was a number of things. I mean, they got into, I like how Herbert, you framed it in terms of short term, medium term, long term. Short term, they basically confirmed that there was a tremendous amount of stranded supply in Q1, and they said they guided to Q2 being much stronger than Q1. So let's see what that turns into. A lot of those stranded supply issues should clear up. I wish someone would have asked directly if you solved the Model 3 issues, because if I try to order a long range now with white seats, it's still kind of delayed. So I think they still have to work through that. It's a very popular model, but they definitely spoke to the short term as well. On the COGS side, they used the term per vehicle COGS reduction. So what that means is that's not just a mix change. That means per vehicle that they were able to take, rather significant COGS out. And I think that's why there's a little bit of a surprise on gross margins. And, again, they continue to guide lower on that, or sorry, guide cautiously on that, I should say. And again, if I were to break down COGS, it looks like they're event driven and they're inbound commodity driven. Looks like they were able to really take that to the house. And then on the Gigafactory side, they probably had some unfavorability in Q1 with the lower volume. So the actions they took in each factory to deprecate that capacity, both labor and capital, is going to start paying off in probably June on. If they do warn notices, those are about, you have to pay the labor for 8 weeks minimum. Usually it's different by state, but basically second half of the year, they're going to more right size their capital between now and then the new vehicles coming online. When the new vehicles come online, they've got time to rehire the labor and to bring the CapEx up, probably in a more efficient manner as well, given some of the component choices they're going to. That leads me to the next thing, just quickly. I think Lars described what's going to happen in this tweener. We call them these tweener vehicles coming out, which is they're going to pull forward a lot of the modules. They call them, and by the way, this is used in the smartphone world because there is an unboxed model in doing that. They're using the term modules, which these are the, think of the drive unit, think of the electric motor, think of the battery modules. There's many different modules. Think of the 48 volt, so forth. And what they're going to do is basically be able to do the tooling modifications in the chassis to support these changes and also take the controller count down. There's a number, basically saying there's a number of concepts that they can pull forward and put into actual production from the next generation vehicle. And that way, when they get to the next generation vehicle, all this stuff's been worked through. You get the COGS reductions on the call these tweener new Model 3 and Y and whatever other vehicle types they're talking about. And then the 25K vehicle, that platform really becomes about unboxed and becomes about process time in the factory and all the new CapEx in the factory. So this actually helps de-risk the next platform and helps Tesla de-risk their path to the next platform because they don't have to squeeze the existing 3Y rock, as much as for people were getting concerned about. Now they're going to have all these event-driven actions to take the 3 and Y COGS floor way down. Again, maybe somewhere in between, 18K and where they're at today in the 32K range. Sorry, it's long-winded.
There's a lot of predictions that people are making on this panel today that was right. Well done, Jeff. And the things that you were calling out earlier, you were mentioning that even for anybody we're talking about it, that they might use the unboxed model to kind of to implement it into the Model 3, Model Y. They confirmed that. The idea that autonomy, man, they were just talking so much about autonomy is you got to believe, if you're an investor in this company, don't invest unless you believe autonomy is going to happen. And their confidence level. And then they said, even Ashok said, right, that we can actually see and we can measure the rate of progress. These were things that I know Hans said. We were talking about that a while also. So just so many things that I can't my list is 10 line items of the things that we did not know, but now that they've confirmed, that is really important information for us. He felt very confident that FSD is going to happen in China. And then, we can tell you now the 12.4 and 12.5 are much, much better. And then I am shocked a little bit that 8.8 is going to be way more than just the reveal of the Cybercab, this new robotaxi. They've already shown us the app, but they might actually show you other vehicles and might actually show you some sort of production level, right? What was the comment that he made about that kind of inferred was the case?
Yeah, that was when he was asked about the plans for the next generation vehicle and getting a specific announcement for the $25,000 car. And he said, you'll hear more about those plans on 8.8.
What do you guys think that meant?
I think we'll hear more about their plans on 8.8.
That's exactly what I was going to say.
Bugger.
I'll tell you what, the biggest surprise to me was that obviously the SAY questions are pre-asked, but what surprised me was all the institutional investors who know so much more than us, nobody asked about the scaling network app that they teased. Not a single question. Nothing, poke, prod, anything. That was wild to me, especially with Uber being down. And that was just a miss to me.
These are not always the brightest people. I know they like to think that they are. They certainly sell themselves to their clients that way. But even the ones that are actually really good are covering 10, 20, 100 companies. So they don't have the kind of live it every day understanding that some of us do. When, I do cover other companies, but to such a small degree that, I don't know, I'm just a lot closer to it. And I think that when they found out that they could be one of the analysts asked a question, they just got so excited they shut down and just went with what they wrote yesterday.
Does the panel feel like Elon did a good enough job to assuage concerns about his interest in Tesla and his future in Tesla?
Doesn't matter what we think. Stock's up 10.9%.
And I would agree with that. And I would say that really the biggest risk for the only key man risk I can see is alien abduction.
I will say it's kind of hilarious. Like, I'm just looking at X right now, and it's comical to watch like Ross squirt. I'm sorry, I'm gonna be the not nice guy here, but it's kind of hilarious to watch him squirm here, trying to find anything, trying to post random things about why it's such an issue about the earnings and all that. And now the last thing he has to grasp on is saying, "Oh, that's it. That's the final straw. Martin Vieca's leaving. That's it. Like, it's all, everyone's gone." I'm like, are you serious right now? The IR guy? Like, don't get me wrong, I love Martin. It feels like, he's
Well, there's a
out and
narrative
part of
he has
us.
to uphold. There's a narrative. Yeah, there's a narrative he's got to uphold.
Yeah, the narrative is, buy high, sell low, right?
Yep.
Well, and if he had a good working relationship with Martin, he'll have to create a new relationship with whoever fills that role in the future. And it's entirely possible the next person will see through some of the nonsense out there and not be perhaps as likely to invite him to events.
I don't know, guys. I might have to sell. If Tesla's IR guy is moving on, then I don't think they can actually solve autonomy. So
You should start a
really
fund.
concerned.
I don't know who it was that was speaking, but when they're talking about 4680 and they're talking about the batteries, I guess it sounds like whoever's going to be replacing Drew, they spoke very eloquently and definitely seemed like they picked right up.
That was
But I don't know
Lars.
who that was. So
That was Lars on the
Lars?
engineering side, and that was Karn talking about the supply side of it.
Okay, Karin's who I must have heard. I wasn't familiar with his voice.
All right, let's
Karn
ask the
wouldn't be
panel here.
Drew's replacement, two completely different skill set.
Okay.
Which of these, what did you hear that was the most important, the one that you're most excited about? For me, it is, Robotaxi. It's the licensing, the potential licensing. One major automaker licensing effort. We're in conversation with that, and we expect to sign at least a deal this year, maybe more than one. That is the biggest one for me, because obviously he made comments about the bot, but the bot is for next year and onward. How about you guys?
For me, it's them being able to have access to cheap batteries because no one else can make EVs profitably. That underpins the entire business.
Yeah, it's chips all over again.
For me, the
you-
most. Oh, go first.
Go for it, Emmet. No, you
I was
go.
going to say the bot, his conviction still upheld in the bot, and that, an aggressive timeline of end of this year, working on the factory, maybe, and working within Tesla, and the end of next year, maybe selling it externally. That's going to be so incredible when they start taking orders for a humanoid robot. I mean, I'm going to order 100 of those things and just like have an army of them or something. But it's going to be so crazy. This humanoid robot, it's just going to get more and more advanced, super fast. I mean, I'm so excited about that. I am most worried about key man risk. It's great to see Elon focused as well. He seems to be refocused on Tesla, reprioritizing Tesla, despite all his, other endeavors. But my concern is the targets on him from all over the world now. I mean, you got Brazil, you got Australia, you got, other socialist, you just have so many. He's so involved geopolitically at this point that I hope he has the best security ever, because there's a lot of people who wish he did not exist right now. And that's my biggest concern.
There was actually a thing on CNBC yesterday morning. Yeah, I'm one of those people that watches Squawk Box every morning before the gym. But there's a thing on CNBC saying that Elon Musk actually had the highest cost for security year over year than anybody else in the world.
Should probably be even higher. Yeah.
So I'll pick a different topic. Oh, I'm sorry. I'll let you go in a sec because mine's going to be super quick. Just to pick something different. Those are obviously huge. Farzad's right about batteries, and everyone's right. But a lower one that I am excited about is confirming cloud compute in the cars. I'm sure it's something you can opt out of if you're worried that your chip is going to wear out, or maybe they'll extend your warranty on the chip. And I imagine they would pay you more than your electricity cost to use it and only use it when your car is sitting. It's another very small revenue stream. But if they want to give me double my power back on it, take as much juice as you want, this would be the largest, most powerful computing cluster in history by a substantial margin. So I think that is an opportunity that would be, fantastic. And it's good to hear that it's a possibility.
Yeah, Brian, edge computing like that is the biggest TAM in computing that nobody has been able to really crack the code on that. And yeah, if Tesla could do that, it'd be huge, but it's extremely difficult to get edge computing like that and be able to interlace it, deal with all the networking for it, right? I mean, AWS does a great job with it, and that's why Netflix works so well, Prime works so well, but it's very difficult. But the TAM is huge.
And one thing they said on the call, which I think is important to point out, is one of the huge benefits that they have in built is the cooling essentially built in. I mean, the problem with a lot of the main like clusters or any data center is like you've got all these computer chips super close to each other, and then you've got to have like a huge amount of cooling, and that's a huge amount of additional capital costs and also parasitic load. So extra use of electricity to run the fans and, coolant and all that. So if you're instead can just tap into a very small computer that's drawing 50, 60 watts, something like that in, 40, 50 degree ambient weather many times of the year, that's a very nice benefit. Somebody just posted on X, no idea if this is accurate, but it seems about right that they did some quick math and came up with around $300 per car as like the revenue opportunity, assuming, some stuff around utilization. And the electricity cost on that would be very low just because the draw on the FSD computer is so low. So it's, small. It's not gonna be the sort of thing that completely changes the company's financial performance, but it's a really cool idea and one that I think, is just accretive, and I think helps to change the mindset of Tesla as this, AI and kind of services based company instead of just, there's just an auto company. Like, look, the sales fell, so Elon bad. It's just, I think they did a great job of changing the narrative this quarter.
Just to clarify what you're saying, though, I did an interview with Brian Wang, and he calculated that the individual car owner could earn $250 to $2,000, depending on what happens, for you to rent out the inference chip in your car when you're not using it. But for Tesla to have a Dojo as a service, that is a massive business. And he's talking about it, at some point in the future, there'll be 100 million Teslas. He said that number a few times, 100 gigawatts of compute distributed around the world. That is not a small business for Tesla.
Yeah, make sure, let's be very specific. There's two different things between distributed inference compute and Dojo as a service. Those are two different things.
And the other thing to keep in mind, that sounds really great, but those cars will also be running as robo-taxis most of the time, if Elon's vision comes true. So then you're not going to be doing distributed compute. You're going to be, doing rideshare, and that's a much higher margin, much higher, revenue dollar stream. So maybe there's a nice opportunity where you can further optimize by getting some passive revenue while, the car is parked at 2 a.m. or something like that. That's great. But I don't think it's you have to kind of look at the use case and say, okay, if robo-taxi, then you really have to scale back the utilization that you're assuming on, the distributed inference compute.
He specifically said that even a robo-taxi, there's still 100 hours per week available.
Yeah, the way that would work, it's like, so again, AWS, we'll use that as the example here. EC2 instances, there's a spot market, right? So normally, if you know what your load's going to be, where you're going to train, you got to be certain hours, you'd buy a savings plan. But if you are intermittent and you don't care when the function needs to run, you can buy on the spot market, which is way cheaper, right? So you can be like, hey, yeah, just run this Lambda function at 2 a.m. No big deal. I don't care when it executes. And that's how I think that would work from the inference side. So we can do our training when other people are asleep, maybe across the world, etc. But again, just to make sure we're drawing a delineation here, Dojo as a service, that's extremely high profit margin. That I would say is more akin to AWS, whereas the inference side of it is more.
I mean, I would say for me, this is probably the most important earnings call that we've had in a long time. I think we're going to look back on this in several years, and this will be one of those calls where it was viewed as a turning point in the structural type of a company that Tesla is. That, they mentioned this in saying we're reorganizing for the next phase of growth. We've heard all sorts of talk about all of the software things that they're moving into. We got teased with the Robotaxi app. One of the big announcements that we heard today that was confirmed, we've kind of heard this before, but I wasn't sure if they were still committed to this plan, and Elon mentioned it, is that they're going to have their own vertically integrated Robotaxi fleet, and that customers will be able to add their vehicles to the Tesla network. And so, we'll have to see if there is any sort of licensing to other vehicles of the ability to participate in that network. If other car companies actually purchase those vehicles, or the licensing agreement for the software running on top of the hardware that Tesla uses. We had lots of confirmation about, like how long it's going to be for other OEMs to adopt this technology once Tesla has it working, even for the first ones. And all of these things, when I have talked about this becoming the AWS phase of Tesla's growth story, what I'm talking about is not necessarily that they will be able to provide a service that kind of looks like AWS. I'm talking about the fact that the entire company now is running high margin software services on top of all of this hardware infrastructure that they have put into place for so long. And that the entire company moving forward, the value of every car that has been delivered in the past is now significantly more than it was. And the value of every car produced in the future is significantly more than it ever was in the past. At the same time that everyone else is pulling back on all of their investments, and Tesla is pressing forward on all of their investments. They have access to more batteries, just like Farzad said, from all of their suppliers, so they can kind of pull back maybe on investing in 4680 ramp. But instead of doing those things, they're investing heavily in artificial intelligence. They're investing heavily into ramping up capacity and accelerating their plans for bringing new vehicles. Like, they have pedal to the metal literally at every area of the business at a stage where, the margin profile moving forward is going to inch closer and closer to, a high margin SaaS company, and away from these low margin, vehicle manufacturer type businesses.
I would say in the comments that if there's things we missed, you got to tell us, because at least on my channel, please do fill up the comments. I will read them. I'm sure a lot of people are very angry that we're not upset, but I heard a lot of hopeful news and only a little bit of bad news. So I don't know about you guys, but I'm feeling better than I expected I would be.
Sometimes I think it's important with these calls also to think like, okay, how much of our mood is really dependent by the stock's reaction? Like if the stock was down another $10 after this earnings call, would we still be happy with everything? I don't know. It's hard to say, but I do think Elon was in the right mindset, refocused, and he's just reframing Tesla as an AI FSD, company of the future versus an EV manufacturer. I think that we're in the process of that.
Yeah, that's a good point, Emmett. But what I would say is, they essentially just announced new products coming out either at the end of this year or first quarter of next year. Like, that's reason to be optimistic despite the stock, right? That's stock aside, that's company specific. And I think that's bullish, just on its face for the company's performance. And then also, just it seems like A8, to Herbert's point earlier, is going to be more than just an unveiling of a vehicle. It looks like it's an unveiling of a vehicle, the network, AI driver. I hope I'm not butchering his X name, but he was zoomed in. He brought up a good point. Is this the new visualization for what's to come with the FSD? Like, if you zoom in, it actually looks extremely interesting. So I don't know. I think there's lots to be optimistic on. Numbers aren't always everything. Like I said before, we're in a weird place with the economy. All the automakers are having their own challenges in general, but I think long term, this is going to reflect the same. History just repeats but doesn't repeat, but it rhymes, right? We're not repeating the same issue with the chips, but here we are with the batteries. Here we are again with these automakers pulling back. And what does that mean for Tesla? Well, they get to take advantage of this. So, I think stock aside, I think there's genuine reasons to be bullish without us just being in an echo chamber, which, straw man me if you can on that one. But
I think part of this is the stock was so beat up over all the stuff that we already knew. And so, I mean, if the stock had rallied into earnings, this would be a different story. And I'm sure like the commentary would be a little bit different. But I mean, this is what we've been talking to a lot of our clients about who are, struggling with stuff. And like this sentiment is extremely low right now. And like for sentiment to continue to go lower, you would need some serious surprise. So I think it's something of a situation of like the stock probably got overly beat up. Everyone could see every single problem. And then now there was actually a couple bits of nice news, some nice job like reframing the company around AI. So it's like this is the appropriate reaction to the stock in my mind when they've kind of reassured around some of the near-term challenges and also did a great job repainting the picture of the future business opportunities. I don't think this is us being delusional. I think this is, the market overreacted on the way down and now it's, kind of recorrecting and saying, oh yeah, like there actually is more growth beyond Q2.